Hope everyone is having a great day and appreciate you all taking the time to join today's discussion on is the Compensation Committee becoming the new Risk Committee? My name is Tara Tays. I reside in Los Angeles and I'm a partner at Pay Governance, an executive compensation consulting firm. And since January 2023, I've been working with Lisa and Kate at NACD to form a community of Latino directors who can share their experiences and connect on a personal basis. We welcome all questions, so please include any questions in the chat and we'll address the questions as they come in. We are very fortunate to have Lou, Tricia, and Tim serve on today's panel and have them share their experiences on compensation committees and related risk areas that committees are exposed to. So let me turn it over to Lou to kick off introductions of our wonderful panelists.
Hi, Lou Miramontes here. Great to have all of you with us. And compensation is a great topic for us to share today. I sit on 2 public boards and 1 private board and got a number of years of experience with comp committees. My background primarily is in the audit side, so I've dealt with the audit perspective and the comp perspective and a lot of things to deal with in all these subjects. So happy to share my learnings with the group today.
Great. So I'll go next. My name is Tricia Montalvo Timm, and since we're doing the cafecito, I'll tell you where I'm from. I'm a first-generation Latina. My mother is from El Salvador, and my father is from Ecuador. I have served. I currently serve on a private company board, late-stage private company called Salsify. Prior to that, I started my career as a corporate securities attorney in a large national law firm where my practice specialized in IPOs, public company reporting, M&A, venture capital. And I would say in that role, I learned and spent a lot of time counseling boards and compensation committees, particularly around executive compensation. My last role, operational role, was as general counsel of a data analytics company called that we sold to Google for $2.6 billion in Google's 4th largest acquisition. I currently serve as the chair of the compensation committee over at Salsify and serve on the audit committee as well. I'll turn it over to Tim and wrap it up.
Thanks, Tricia. So my name's Tim Chou. I'm honored to be asked to be here. My only Latino connection is my 3 daughters are all fluent in Spanish, and I'll explain that sometime in the future to everybody. But I have sat on public company boards for a little bit over 25 years now, actually always on compensation committees. And so I have kind of developed some maybe different perspectives of what is the future of compensation committees.
Great. Thank you all very much. Appreciate it. And again, thank you for being here today. So I think as you all can attest to, public company compensation committees continue to be a challenge as they seek to approve compensation programs that the board believes will promote sustainable long-term value creation, while also taking into account, all key constituent views on how to maximize investor support on these programs. Now, under Dodd-Frank Wall Street Reform and Consumer Protection Act, commonly known as Dodd-Frank, there was a number of mandates that expanded the role of compensation committee members' purview and companies' exposure to risk. These mandates have included say on pay, adoption of clawback policies, updates to 10b5-1 plans, requiring all public companies to conduct compensation risk assessments, and expanded proxy statement disclosures such as CEO pay ratio and pay versus performance. So needless to say, the compensation committee's purview has expanded over the last 10 years. Tim, it would be good to get your perspective on how the role of the compensation committee has expanded beyond approving a company's executive compensation philosophy, the incentive designs, and executive pay levels.
Yeah, I'm off mute. So I think everybody's on the call kind of knows, we'll call it the generic role of a compensation committee, which usually has to do with figuring out what your peer group is, figuring out what quartiles you're in. I'll call it some of the administrative aspects of compensation. I think what I'd like to share is the very first time I ever sat on a board, the observer on that board was Arthur Rock. So some of you may know Arthur Rock. He's still with us. He actually was the venture capitalist that funded Intel and Apple, two baby little companies. And so after about a year on this board, I turned to him and I said, "You've sat on boards for lots of years. Like, I don't get what the job is." And he says, "Oh, it's really simple." I go, "Good." He said, "Well, once a quarter, you get to decide where the CEO stays or leaves. That's the job," which I've repeated many times to people, including CEOs, that fundamentally is the job of the board. Yes, I'm glad to provide my insight into this, that, and the other. And yes, we have an oversight role to be played. But in the end, that's really the biggest decision. Obviously, that decision's a very big decision. So the other question that's been in my head has been, well, so what are the other levers that a board has in terms of guiding the company? Because you obviously do not want to be in the middle of their operations. And so I increasingly am believing that compensation committees, which, by the way, are always subsets of the overall board and therefore often meet more frequently, can behave more as a team, we'll call it that, than the larger entity. Compensation is obviously the direct connection to the CEO as to what it is you're trying to communicate as a board with, let's call it more specificity. Obviously, compensation, which occurs over periods of time, also gets you into the question of, well, what is the strategy of this company? And so I've increasingly been wondering the question of, what is the role of the compensation committee beyond its, we'll call it operational role, which obviously it has to do? Is it not yet another lever that we as a board can use in guiding a company that is, meaningful and strategic? So that's what I had made a comment at a audit group a couple of months ago, and I think that stimulated some conversation from Lisa about why and how we might want to talk about compensation in the future.
Great. Lou, any additional thoughts in terms of how the committee's role has evolved over time?
I've got some reflection to share, but first I failed to share my connectivity to the Latino group. I'm Hispanic. Both my grandparents are from Mexico, and in my whole career, I spent 38 years at KPMG, and leveraging that culture and language took me to work in Latin America for 11 years with that firm. And so I was able to live my culture and language, and I brought it back with me to the U.S. And when I was back in the U.S., I led our diversity efforts nationally, and as well as my regional efforts. So that's me. And now as a board member, using all those perspectives, both domestic and international, in terms of my job. The comp committee is a key committee of the board. I spend time on the audit committee as leading the chair of audit committee and the chair of comp committees. And I find that the comp committee needs to get really close to the strategy of the business, really gets to understand the CEO. Tim talked about the CEO, but also the other executives. What drives that team to execute well? And it's beyond pure information. It's beyond flip charts. It's beyond board packs. It's really understand what makes that team work and try and figure out the way to connect the motivation, the recognition, the rewards to performance. And keeping in mind all that goes around that in terms of compliance, regulatory requirements, disclosures. We heard about clawback, fairness, and then oftentimes sort of disagreements internally. All CEOs want to get paid a lot of money, and all shareholders want the CEOs to get a lot of money if the shareholder return is there. So have an alignment there. But the committees talked about strategy really needs to understand what the plan of the business is relative to growth, relative to new markets, relative to new customers. Maybe there's some financial difficulties, how you overcome those. So it's a lot more than the CEO, although the CEO is the leader of the team. And so there's constant assessment of the CEO and rewards. And I found myself as a comp committee chair having a lot of interaction with the CEO as opposed to when you're the chair of the audit committee, you're having a lot of conversation with the CFO and the finance team. So I think that relationship is key. You need to be able to stand tall and challenge, because you will get challenged. So preparedness is really a key to succeeding in that role. So I think it's growing in terms of risk, in terms of importance, because you need to have the team aligned with the performance of the company and make sure that, the way I like to say it, when they wake up in the morning, that they know what their tasks are and they're motivated to accomplish them. And at the end of the day, get recognized and rewarded where appropriate.
Thanks. And any additional thoughts or lessons learned along the way in terms of how much balance should go into aligning the company strategy to the annual incentive program or the long-term incentive program? You know, should it only be financial measures? Should it be a mix of financial and non-financial measures?
I think that short-term versus long-term view is critical, because you do have an annual plan that you want to accomplish, but that should lead into multi-year goals. You know, do you want, what's a growth goal? And then if you're introducing new products or going into new markets or trying to improve employee engagement, customer satisfaction. So there are other metrics in that aspect that should be considered. Clearly, the financial are the most relevant, the easiest to measure and reward, but there are others, and each company will have a different list of those things that should be attained.
Great, thank you. Tricia, as we've been discussing over time, there's definitely been a number of factors that have impacted a company's strategy. What are your thoughts in terms of how compensation committees can ensure the executive compensation program best aligns with the business and talent strategies of the organization?
Yeah, I mean, I think we've seen, over most recently over the last 5 years, but even if you look back, as you were talking about Dodd-Frank, I was thinking about Sarbanes-Oxley and all the different changes that have come into boards. Companies have really had to learn to be flexible and pivot. In the last few years, we've gone from in-person to remote. We've had the Great Resignation. We've had all of these different things. So I've seen a period of time where we had corporate governance come in, and now I'm seeing culture be an important part. I'm seeing executives really care about cultures of a company. And so I think you have an opportunity through the role of the compensation committee and the role of your design of executive compensation packages to not only have the financial aspects of it, but really what kind of culture you're creating at a company. And within the compensation packages themselves, I think you also have to be aware of what's happening in the markets. So in terms, if you're looking at private companies, for example, a couple of years ago when the IPO market was, having record boom, and you had the, largest number of IPOs, we were focused on ARR growth, and the revenue number and the top line was where you wanted to see the company grow. So compensation cash bonus plans were designed around that. We're seeing a pullback. We haven't seen a lot of opportunity in the markets around IPOs. We'll see what that, how that looks this year. But the valuations and bankers are taking companies out on EBITDA and profit margins. So how do you design compensation programs that are aligning the executive and the business strategy to meet some of the market factors that you're seeing out there? So I think it's a combination of the financial factors and culture factors. And I think, as Lou said, not every company is the same. So I think staying in close touch with the executive team. One of the things that I do is I meet regularly with the chief people officer. And so I really get a sense of the pulse of what's happening with the executive team.
Very helpful. So, I mean, as you mentioned, companies are just faced with an enormous amount of external factors, and plus the outstanding pace of technology, the business innovation, the digital transformations, the societal shifts. I mean, there's so much that it goes into, making sure that you have the right executive team today and in the future. And it's just so important that board members have the right executive talent team. They're working with the right, team in place to move forward the strategy of the organization. So given the criticality of having the right executive leadership team, how should compensation influence a company's ability to attract and retain top talent?
Off mute. So I look at compensation, or if you will, executive compensation in a couple of three buckets. I will say, obviously, competitive comp and benefits, culture, as I mentioned, and growth opportunity. On the comp side, as Tim mentioned, you got to just pay at market, obviously, and there's a ton of advisors out there that'll help you figure out what's at market, what your peer group is, and creating cash and bonus plans that are at market. Also, looking at severance plans, ensuring that executives are on the same page across the board on a severance plan, because I think that matters as well. And as I mentioned, I think that I'm seeing more and more executives that we interview really talking about culture being a major factor in their decision. I think that's changed over the last decade. I think executives are sort of willing to, take work in a more toxic environment, just to get that opportunity. But I think you have to have the mix of those things now, especially for top talent who has choice. So I would not underestimate that importance as you think about the company that you're building, especially now with a lot of the rollback of DEI initiatives. I think that a board and a leadership team that continues to figure out a way to evolve those programs to continue to retain and recruit that talent is going to be important. And then I would say the last thing would be growth. And whether that's company growth or personal growth, some kind of growth opportunity. Executive talent wants to see an opportunity to increase their skill set, grow companies. If it's a turnaround, there has to be something that is attracting someone that is, especially for top talent, that they're going to somehow grow from that opportunity. So whether it's personal growth, larger business unit or larger role, or career growth, I think those both are going to be important.
Great, thank you. We actually got a question that came into the chat box, so let me read it out for the panelists. There was a statement about activist investors having challenged some boards on executive compensation in recent proxy fights. What should be the strategy to address these concerns if they come up? That was the question. So I don't know if Lou, Tim, Tricia, you want to take that one?
I'll start here. First, listen as a committee, try to understand the perspective of the activist. They're shareholders normally, and so you need to respect that. And then you try to understand what their view is, what their comments are, and reconcile that to what management is doing, what the committee is leading. I've always lived on the principle, if we're doing the right thing, the best for shareholders, best for people, you're in a safe and a proper zone, but that can get challenged, and then you need to respond accordingly, but you do have to listen.
Great, thank you, Lou. Tim, anything to add, or Tricia?
No, well, maybe just to say something, which is, obviously, this is one of the reasons we all do all the benchmarking work against comparables and whatnot. So in essence, these numbers are not like a random series of numbers that are coming out, right? Although I agree with Lou, obviously engagement. The one comment I think both Lou and Tricia made that made me think a little bit was, I've always been involved in software businesses. Software businesses are people business. That's all we have is humans, right? And so really compensation strategy, you can argue, is also a manifestation of culture. I'll give you a trivial example from my past. I had the opportunity to be at Tandem Computers when it was a young startup company. I was also at Oracle. Let me tell you, the compensation strategy relative to stock was completely different. In one case, it was even the janitor got 100 shares. In the other case, I think the company was probably 10 to 15 years old before anybody outside of R&D ever got a share of stock. And so that's obviously a very black and white example of something. But I do think given most businesses, at least in our area, or all software companies, really the manifestation of how I want to think about my company is exhibited in your compensation plan, up and down, not just exec compensation, but up and down the food chain. And I know a lot of times, at least for me, I'm always asking questions, which is the role of the board, to see, well, what does this mean to our rank and file engineers? Or what does this mean to the entry level person that's coming in? What does this mean? Are our women engineers being compensated as our male engineers? Question, right? So I do think that's where compensation, again, it is a piece of data, which is a manifestation of so many different aspects of the company that you cannot see any other way.
And
Great points.
I would like to add on to that. I mean, I completely agree with what Tim just said. And in terms, as I think back to our sale of Looker to Google, one of the things that we kept in mind as we went through that process was ensuring that every single employee was taken care of in that transaction. And when you've got, a number of different investors around the table and executive, like there are a lot of interests that are pulling. But the founders really and the board really made sure that we were taking care of everybody. And so it was a win-win situation for all the employees. And that goes back to the root and foundation of that company was really rooted in its culture. And so you do see that come. If you have a great culture, you tend to care about your employees and you tend to have a compensation strategy that reflects it.
Excellent. There's actually another question that came up on, can you speak to the role of the compensation committees in succession planning vis-a other board committees and the board as a whole?
I would say that the comp committee can be a catalyst to make that effective. I think everybody's got a succession plan idea or arrangement, but I think pushing that into the depths of the company, whether it's the top executive team of 10 or 20 deep, or the key roles in the organization, because that's, as you look at compensation, you look at key players and you look at, how you have backups, if you will, should people leave the organization or promotion opportunities arise. So I think it's critical. I've seen a mix where it's full board and then it's comp committee. But I think a continuity there, I think is more consistent to have the comp committee be the catalyst to make sure it's happening on a constant basis.
In
Great
my
points.
role as chair at Salsify, I did take the key role. We recently had a CEO succession, and I took the lead role in negotiating the new comp package with the candidate, also negotiating the severance packages with the departing executives, and doing all that benchmarking and working with the board and coming up with that. So we did take a key role in that process. But I think it does depend on each board. It might be different dynamics and personal relationships and whatnot, but I think we can play a key role in that.
Right. Yeah, and oftentimes we see, either the succession planning, again, at the board level or at the nominating and governance committee. I've also seen it there, or sometimes at the compensation committee. But I will share a data point by Spencer Stewart. They actually did a Fortune 500 study to see the average turnover within the C-suite. And what they found, perhaps to no surprise, is that the average CEO tenure was about 7 years. And while the average tenure of other C-suite executives was about 4 years. But what I thought was also interesting is that, about the findings from that study was that a 41% on average of C-suite, positions were external hires. So definitely, sometimes not always organically promoted, but also externally recruited. And so I think it is important for organizations as they think about their succession plan, not just to focus on the top layer, but maybe to 1 or 2 layers down as well, because that is crucial as we think about having the right talent within the organization. Lou, let me turn it over to you for a minute. From a talent retention perspective, how should compensation committees consider adapting their strategies when company's stock price is underperforming?
Yeah, that's where the comp committees have to step up. Well, the whole board does, but the comp committee needs to lead the charge. In those situations, you have shares that have declined in value in a significant way, a material way, 50%, 60%, 70%. So the equity of the existing employees has dropped. In some cases, it's underwater, meaning negative. But you still need to operate the business. You still need to have a plan to move to a profitability state, increased value. So you need to understand the strategy of the company. What are the problems? What are the issues? And what are the plans to execute? Is it refinancing? Is it raising equity? Is it seeking a partner? Or is it seeking a sale? All of those alternatives need to be looked at. Once you decide on what the best course of action is, understand how you can motivate folks to stay with the company and get rewarded with the recovery. Because if you're issuing equity in particular at a low stock price and you see a significant climb over the next 1 or 3 years, there could be tremendous value creation for the employees. And so I think that message needs to be refined, and that message needs to be communicated, particularly to your key players that are going to make that happen. Second is some folks have personal needs and they may need to change or want to change jobs to have a recovery of their position. And so I think you need some retention bonus strategies built in there. So you can give somebody some short-term rewards in the next 6, 12, 18 months, so that helps ensure that they stay. So I would say the bottom line is you need to be creative, understand the path to improving operating results, hopefully recovering of the core business, stock price appreciation, and creating value for everybody. And then you need to communicate that and have examples and have milestones that folks can relate to, 6 months, 12 months, whatever. Could it be cost reduction? Could it be selling a part of the business? Could it be restructuring to focus on customers? Lots of options have to happen in those situations. But again, I'll repeat, and I've seen it in my career where folks have seen a 70 or 80% decline and they hang in there for 5 or 10 years and they're handsomely rewarded.
Great. Tricia, now, while it's key to attract top talent using your executive compensation program, it's also important to retain and motivate top talent. But we also, there is also a point of view from many committee members that promoting diversity and equity and inclusion at the highest levels is important and sometimes needs to be aligned with the compensation program. Can you share your perspectives on the alignment between executive compensation strategies and DEI initiatives?
Yeah, I mean, I think one of the important points here to think about is transparency. I think that, I think Tim mentioned earlier around pay equity and being transparent around our pay practices and being honest about where we are, what we are, who we are as a company. Are these values that we genuinely and authentically care about? Or not, and being transparent about that, because I'll tell you, people can see right through it when you're not super transparent and honest about that. So if it is something that the company and leadership truly values, really thinking about what do your hiring practices look like? Who are you sourcing from? Throughout my entire career, every time we're hiring somebody or bringing someone on the board, the first question is, who do you know? And so we're comfortable with who we know. And what happens with that, as we all know, is that, it comes from the same pool of people. And as I've been more involved with various organizations, whether it's women's organizations or Latino organizations, I know that there's incredible talent out there. And there's just this network gap. They're not networked in. And so I think it's a responsibility for leadership at companies and boards to say, hey, where are we sourcing our talent from? What does the pipeline look like? There was a former CEO that I talked to at a different company that said, one of the things that she did when she was hiring executive talent was put that pressure onto recruiters and say, I will not look at the entire slate until the entire slate is diverse. Because also the ordering and the momentum of folks matters, because if someone gets ahead in the process and then you bring someone in later, it's a little tough. And maybe finding diverse talent is a little bit harder because it's not within your network. So what strategies can you put in to really ensure that you're looking for the best talent out there for your organization? And I also think that representation matters. I mean, we're talking today, you know, for the Latino cohort, that, you know, less than 1% of board members are Latinas. So when you're looking at an organization and you just look at their website and you see who is on their executive team, who is on their board, you know right away, you know, if it looks a certain way, that do you belong there? And so just that sense of what, you know, who are you bringing in, what diverse perspectives are coming in. I think that really matters. And then finally, I'll say pay equity. One of the things that I learned from my last company, there was a female board member on our board, and during one of our board meetings, she just asked the question, "Have you done you know, a pay gap analysis?" And we hadn't. And her simple question of just asking, "Had we done it?" really put the onus on us, like, "Man, we really need to go do that. We haven't done that." And so really conducting annual pay equity review, and just, you know, talking about that with the rest of the company, that there's something that you're doing, that you're closing that gap, that you're ensuring that equity is important to the organization, really then starts promoting the culture, and then ensures that we're really creating a diverse and equitable organization.
Great points. Thanks, Tricia. Tim, any additional thoughts, or in terms of how boards well, your experience on how boards have responded to changes in diversity conversations and whether they played into
Yeah.
compensation strategy?
I don't, you know, I don't know. I think it's two sides of it. One, you know, I think of all industries, tech has been the most equitable versus, you know, any of the other, let's call it traditional old line businesses, because it's a younger business. I have made this comment at Stanford a few years ago. The number one major for women on campus was computer science, which is really interesting to think about that. I wonder a lot. I've spent time talking with my Black brothers, all two of them, about why, you know, you do not see Black kids, right, in these programs. What's going on? Obviously, the Asian community's been into this for a while now. But I think the seed corn of the future, which is a lot about how I think about this, whether that's seed corn of the first hire at some company, or whether that means as it progresses along, if we're not mindful of what we're planting and who we're planting with, we will get a very monochromatic world going forward. And I think it's much more, in my opinion, about that we, the collective, we need to be thinking about this. And how is it that, you know, and I'll just, you know, as I've said, I've spent time with the Black community on this question. You know, you do not see, I'll just give you an example. Right now, if I'm a Chinese kid, I go, you know, I've heard of this Jack Ma guy. If I'm an Indian kid, shit, you go over and look at who's running Google and who's running Microsoft, and you go, I see that's a pattern I can live with. Okay, now try that with a Black kid. There isn't anybody, right? And I think back to ultimately it's our collective responsibility to make sure that the seed corn gets in there, starts growing, so that it is a diverse population at the end of the day, whether or not we want to call it DEI and have regulations and all that, right? That we do take advantage of the fact that a diverse community does have diverse ideas. And at the end of the day, that is a powerful concept.
So Tim, if I'm hearing you correctly, I think it's really important to make sure that whether it's the chief people officer reporting out to the compensation committee, or maybe perhaps the full board, making sure that the board members are informed in terms of representation and where there's opportunities.
Tara, I just want to add something to those comments is, you know, my boards have been B2C, a consumer-based enterprises. And so if you think you need to focus on the markets that you serve and the customers in the markets that you serve. And so, you know, thinking about how our Hispanic community would buy a product or buy a service, and if it's a large customer base for us, how do you reach them? How do you best serve them? And obviously make money from them, if you will. So having an understanding of the sectors of our organization, of our country, if you will, the markets we want to be in is really critical. So I think, even in the playing field internally, so you've got the right talent that understands those dynamics, and rewarding accordingly is really critical, because you could get it wrong in terms of trying to sell cars or pharmacy products or lending. The markets are different. So having a cross section of understanding would, I think, lead to better performance for the company.
Yeah, and and you think you made a great point, Lou, that I just want to, double down on. The Latino community is 20% of our population here in the US. And if we were a country, we would be the 5th largest from a GDP perspective. So this is a huge revenue opportunity and growth opportunity for markets. And so actually not having that representation in the C-suite or on the board is really, you're losing a huge market and a huge revenue opportunity of seeing things that someone, not from the Latino community may not see. So yeah, I think it's not just DEI, it's really about creating, opportunity and revenue growth, profits, and all the good stuff.
Thank you, Tricia. There's another question that did come in, so I want to make sure I get it out to the panelists. The question is, in the current environment with remote work, hybrid engagement, and personal time off policies, how do you see the compensation committee provide guidance or direction?
Well, I can't say that I've had a lot of time on this where I've had to. I think we've let the business leaders drive that discussions and how best to address the needs during the pandemic. The ability to attract talent that doesn't live near the home office. Do you have the ability to have a hybrid model? And so I think all those things are on the table. I think, again, listening, providing insight to the decision makers, if you will. But I think it needs to be driven by the business leaders to how best to achieve their goals with respect to geography or product or division or the like. Some roles are easily remote and some are not, and some are in between. So how do you define which ones those are? I grew up in an environment where we went to office all the time, and I can tell you that I learned a lot from being able to work with dedicated, tough young professionals and older professionals that drove my behavior, helped me craft my skills and my work habits. And I'm not sure that I would have had that same growth in a full remote environment. So everybody's different, but I'll just tell you my stories that I benefited from in-person work all my career.
Thanks, Lou. Tim, Tricia, any additional thoughts on remote work or hybrid?
Well, there's clearly
policies?
what has already happened, which is people are going, okay, if you work in certain locales, you either bump up the pay or bump down the pay based on right geography, which is obviously related to what the compensation committee has. I guess I was going to say something which Lou kind of stimulated. I really think that we're headed into a new work style. I don't think we've all figured this out yet. There are huge advantages in remote. I mean, whether you want to talk about it from a talent point of view, whether you want to talk about it from time management point of view, there's huge advantages. There are also, for all of us old timers, we kind of go, well, but yeah, the water cooler was pretty good for a lot of things. Now, I personally don't know where this balance line is going to end up, but I think that's the struggle for all of us going in the future is how do we blend? You're now talking about corporate culture as well, buried in this conversation, to recognize a future that does not look like where we were before the pandemic. Even though I know people are saying, we're coming back into work, we're coming back into work. Yeah, right. I think we have to rethink what work looks like in this future state.
Great.
Yep.
Thanks, Tim.
I agree wholeheartedly with that. I think the pandemic changed this conversation completely because we now know it works. People can work remotely, and I agree with both of the panelists that there's value in both. I also come from the old school and was in person, and believe in the water cooler, and especially for our young folks coming into the career. But I also was a working mother. And I remember those days when I had to be in the office 5 days a week, all day. And it was very difficult with a young baby at home. And so some of the flexibility that remote or hybrid work policies allow give women in particular more ability to continue their careers and stay on paths to executive leadership. So I think that that's good. And I also have, daughters who are in their 20s, and, they've got a taste of what, the hybrid work model looks like. And they're not, they're a totally different generation. And they're not going to go for the 5 days all day situation. So I think organizations have to know how are they going to keep and retain top talent and be open to seeing, what the right policy is for your particular organization.
Thanks,
I
Tricia.
think I think there's another, I just got to throw this in here, big question that's sitting in front of us, which is that traditionally, and I'll still stay in high tech, the way in which we train people is you came in as a cold call person in the world of sales, or you came in the QA organization and development. By the way, those two jobs are disappearing because I can use AI to do a lot of what, quote, SDRs do today, or why do I need a QA organization? And I think this brings a fascinating question. I had the CEO of Twilio do my class last year, and he said they're already seeing it, that there's no entry-level sales job. So how do you bring how do you get that next level if you've never been through the first level? How does that happen? And and nobody has an answer for this question. And I think that really weighs heavily onto questions of culture, compensation, people, right? Because at the end of the day, it's all a giant people business.
Mm-hmm.
Tricia, I just want to do a shout out for working moms. I have a daughter who's same thing, had two children and worked it out. So yeah, that's why I say every organization needs to find that balance. And working moms are a key part of our success across the country.
Thank you.
Panelists, we received another comment question that came in, so let me read it out to you all. Can we address the panel's thoughts on executive compensation growth versus average employee compensation, and what role they think the compensation should play here? It seems like boards are okay with this big disparity in general.
Well, I don't know if we're okay with it or not. Obviously, we approved the compensation structure. I think that's where the discussion at the board needs to happen is what do we want our philosophy to be relative to our paying our frontline employees and middle management employees. And the way that motivators are set up for the C-suite is if there's outstanding performance of the company, they indeed participate. I've seen them participate on the downside, but for the most part, they're making a lot of money. Let's put it that way. And I think we just have to keep an eye on it and do best we can. The disclosures that are happening in the proxy now are addressing that. And so as more disclosures and more transparency takes place, we'll listen to the marketplace and see what reaction they have as well. I think it's work in progress, though.
Thanks, Lou. Tricia, would you like to add anything?
I mean, I think it's a great question, and I think it's reflective of what's happening in our society and country right now. The way that executive compensation is based is on market data by, different advisory firms that we use. And it's sort of, like we all are going to be 50th percentile and it's just high, right? And so you start to see this disparity between the executive pay and the rest of the company. But like everything else that we're seeing, when is that gap too much? And how are we thinking about ensuring that everyone in the organization is feeling that they're getting compensated adequately, especially when the company is doing well and profits are big? I think it's a great question. And I think that, frankly, we're not really paying attention to that until it's going to, I think there will be a reckoning at some point.
Well, perhaps we can shift the conversation a bit to the risk and opportunities of the compensation committee. So Lou, what are some of the most common pitfalls compensation committees fall into when overseeing compensation related risk?
Yeah.
And how might these be avoided?
Well, the first thing about risk is that you don't want to design a plan that's having management taking more risk than you can tolerate or that are appropriate. I've heard CEOs share with me that they're okay with lack of operational performance, but they're not okay with lack of compliance. And so I think that the CEOs that I've chatted with around this topic believe that you need to have a program that's has appropriate risks, and that you don't want to motivate the wrong kind of behavior or the wrong kind of risk tolerance, if you will. So that would be a fundamental thing, and we're required to make that assessment each year with our consultants. I think the risk is that you're not obtaining enough information from insiders, peers, shareholders. There's a thing called shareholder outreach, and I was able to participate in some of those conversations over the years, talking directly with major positions in our companies and hear their views on compensation and what metrics they think we should build into our program. And I've seen us make changes midstream based on feedback from shareholders or other outsiders. So I think being a good listener and trying to obtain information outside and inside. Don't make decisions until you have the complete information, because I think being rushed is not good here. There's always a deadline you want to meet because of the timing of the stock grants and that sort of thing. So, what I learned as a chair is, we thought we'd start, in late fall. It's like, now we start in the summer, because you need to understand what the philosophy is, what the risks are, what the feedback is from the shareholders, what are peers doing, is a peer group appropriate? And I found that, when you're looking at the peer group analysis, midstream, mid-year, looks okay. Then you get to the end, you look at the results of using that peer group, and it's I think I should have been tweaked a little differently, because that will have outcomes that you probably don't want, but you don't know about them until it's near the end. So I would say that would be one. Make sure that the peer group is indeed the right one. And we talked about the peer performance, the 50%, 25 or 75. Looking at that for the size of the company, not just operationally, but market cap, because that will drive how much you can afford oftentimes in terms of the amount of equity. And then you need to cut back, and you misalign actual results with expected results by the employees. So managing expectations along the way is also important. There's a few things I've experienced.
Thanks, Lou. Tim, as the responsibilities of compensation committees continue to evolve, what should their role look like going forward? And appreciate your thoughts on what the board's responsibility in managing executive compensation might be without becoming operationally too involved with the day-to-day decisions.
I was going to make a comment as something Lou said got me thinking about this. The challenge problem we all have is you're sitting there with a comp plan of some form. You're sitting, on the one hand, you're going, oh God, this is so wimpy. Let's stretch it. This is not a good enough goal. And so your general tendency is, I want to raise that expectation, whatever it is, earnings, revenue, et cetera. On the other hand, you're sitting there, and I just got out of a board meeting like this, where the CFO came in with a plan. We're all sitting at the board looking at this thing and come to the conclusion that the high likelihood is, while this was a great aspirational goal, it's never going to pay out. Which is, what good is that to everybody if nobody gets anything? And yes, we had this beautiful goal to hit. And I think that's where a level of maturity, we'll say it that way, of the board, who has had some experiences at various stages of companies, can come to the fore and kind of create that balance between, yes, we all want 100% improvement in whatever earning, whatever metric we want, but yet balanced against whether or not we've really created a situation where the team can never achieve this. and that's no good at the end of the day. And I think that's not purely an exercise in 50%, which obviously we all have to go do. It's also an exercise in judgment about where the company, where this team is, and and oddly enough, in that conversation, they all laughed. We actually pushed for a less aggressive plan. And they were all like, what a weird board thing to go do. But yet we felt like it was important at this stage of that company's life to do something like that. And I think that's where, I go back to compensation committee has such an interesting lever into the company that no other, audit. Yes, I know I have to go through Sarbanes-Oxley, whatever. I got to go do those things. I don't know that there's a control element to it. And yet in compensation, we just touch on a whole bunch of different things for which it actually is a lever arm into the company where the board can exercise its own judgment, wisdom, all these words in helping the company get to the best place we all want it to get to. And I think that, at least for me, a year ago, I never thought about compensation that way. Never did. And I am increasingly thinking of it as it is the control arm that actually enables a board to effect change in a wise way. Let us hope a wise way.
Thanks, Tim. Tricia, any additional thoughts?
Yeah, no, I agree exactly what Tim is saying. And if you think about levers, I mean, retention, and I think Lou mentioned it earlier. You know, I've said to our, our board and our management team during a restructuring or during a time where there's potential executive risk of executive departure, do we need a retention plan, or do we need a retention plan for key employees? So like thinking about that we're going, or we're about to, or we have just gone through a difficult time, what retention tools are going to be important, whether it's cash or equity plans that are going to help people continue and help us get through a potentially turbulent time. So it is strategic. I mean, there's so many things that you can use as levers to really ensure that the company is, staying focused on the goal and keeping the team together as we go through it.
I wanted to add one comment on the CEO versus employee pay ratio. And just reflecting on how you can have all employees participate in the value creation, and the stock ownership plan is one of those where employees are able to buy stock at a discount. And I think it's important to measure what the penetration is, what percentage of employees are involved there, so you can see if it's growing or not. Because I think the more you're going to have lower level employees or younger employees participate in those programs, allows them to build wealth on their side too. So they are participating in the value creation that's there. It may not change the pay, probably won't change the pay ratios, but it does have engagement there. And we all want our employees to work hard. We all want them to walk away like they're creating family wealth. Heck, that's why we're on this panel here. And so being able to incorporate more employees would be helpful there.
Right. Yeah, I couldn't agree with you. Employee stock purchase plans are a great way for employees to build ownership in the company. But I think, one of the things that's really important when you have such programs is to make sure that you have a good communication strategy as well, so that employees understand the value of those programs. So what I've seen work well is when companies do implement a employee stock purchase plan, that it's multiple times a year where they're educating employees on the value of that benefit. Well, we're almost coming near time. So Tricia, I wanted to kind of ask you one last question. And so I know that you're currently a board member on a late stage private company, and would love to kind of gain your perspective on how the compensation committee role differs from a private company versus a public company. And, what are maybe some best practices for preparing for an exit that you could offer the group?
Sure. Yeah, I'd love to. So let's see, differences. I would say for a private company, we're not subject to some of the same scrutiny of following SEC regulations and being subject to ISS and Gloss-Lewis and other things. So we have greater flexibility in design of compensation programs and how we want to manage risk and be able to put in practices that might make sense for the company at the time. Equity might be a little different too. Early stage companies focus on stock options, and as you get to be a later stage company or public company, you might rely on restricted stock units. In terms of equity, for a private company, though, I caution companies in using RSUs until the right time, because there's a lack of liquidity in a private company. So RSUs are taxed as they vest. So you need to ensure that you have a program that allows for a delayed vesting until there's a liquidity event, so you don't have a tax issue for your employees. But I will say that the private markets are changing. And so you've seen in the last year, big opportunity for tender offers. Since IPOs and other things have been unavailable, we've seen huge private companies, private investors, PE firms and others come in, and the opportunity for employees to have liquidity in tender offers has been great, and a great way for folks to get liquidity. So I think all of that is playing a role. And then I think your question was, how can you best prepare for an exit? One of the things I will say, I'll split up the M&A and IPO. If you're thinking about an M&A exit, I would say to look at your severance plans and your severance agreements with your executives. I would recommend trying to get everybody on the same plan if you can. Usually private companies, everybody kind of comes in at different times and they have different programs or acceleration provisions in place. Some large acquisitions from strategic buyers may not honor some of those severance agreements. And so I'm really ensuring that not too many people have them, I think, is something to think about. We faced that in our situation. And then in preparing for an IPO, I would say just thinking about what does it look like to be a public company. And so starting to create compensation philosophy. Are you paying, getting a peer group together? Are you paying at the 50th or 75th percentile, moving to quarterly 409As? So just getting that governance structure in place that you may not have, in place yet as a private company. So just maturing as a company.
Very helpful, Tricia. Well, Lou, Tim, and Tricia, thank you all very much for sharing your perspectives and experiences. As we wrap up today's session, I would appreciate if you could provide maybe one or two key takeaways for board members to go back to as they head towards their next compensation committee meeting or board meeting.
I would say stay active with NACD. I attend a lot of conferences, and I learn a lot from my colleagues, you on this panel and those on the line. So get prepared, stay prepared, and be involved. Be a champion for change, for improvement at the meetings, and challenge yourself in the organization. You've got lots of talent around you, and leverage that for the benefit of the shareholders and the employees.
Okay, I'll go next. I will say, I'm a big culture person, so I would say I think a culture is part of the strategy of a company. I think it needs to be. And the second point I would say is, I think keeping an open mind and growing your network so that we get more people into the pipeline, so that we can see great talent be accessible to some of these great organizations.
I'm trying to think of something original, Tara, but yeah, I mean, I think as Lou has already said, there are a lot of great people on your boards, on other boards, and people who've thought some of these thoughts. And I think engaging with people and trying to learn what they've learned, as I have learned some things here and thought about things. I think the role of a board member is quite different. I think everybody who's done it than being in any operational role. And I think learning from others is just key to doing this, or trying to do this job well.
Well, thank you all very much. And thank you to the audience for attending today. Hope everyone has a great day.